Welcome to the Daily Brief, where I'll go over the highlights for the action in the market for Wednesday, November 9th, and then see how things look for Thursday, November 10th. And we had a pretty solid down day. It was down over 2%, but it didn't have as much effect on our charts as you would think. Yes, where in yesterday's Daily Brief, I said that we're turning more positive with a 2% down day. Yeah, we're turning back more negative now. You can't dispute that. But in the short term, we're looking a little more negative, but in the intermediate term, we're still mixed. We still have a few of our indicators that continue to go up. Now, Thursday's going to be a big day because that's when CPI comes out, and that's pretty much going to determine what happens. We've been under average with volume all week. We're still in this post midterm election haze where really there's still a lot of uncertainty about what's going on. And the only thing kind of big coming out that could really push the market one way or the other would be the CPI and then the market's reaction to that. So that's kind of the big deal coming out for Thursday. Let's go back and talk about what happened on Wednesday. Right at the open, we had a lower open, and we opened right at S1 at 37.90. And then prices stayed above S1 for a while. Look, we were just chopping sideways. There's not a lot of real conviction right now. As the day went on, there was gradual selling that came in that took prices down to S2 at 37.51, and then we closed at about S2. So we just kind of kept drifting lower and lower and lower on below average volume. So you could take that as somewhat positive, but yet the charts still suggest that we're showing some weakness right now. We were down 2.08% on below average volume. The technicals, as I said, turning a little bit more negative now, but one solid update could shift that back. If we have a negative reaction to the CPI and we see more selling coming in, that could turn things more decidedly negative. And I do have a few charts to show you. And yes, the big fixation right now is inflation and interest rates with the CPI coming out. The really that's about it, unless one of these other things kind of flies to the front with the midterm election, any Fed speak, the whole situation in Iran and Saudi Arabia, which I'm really not hearing about. I'm kind of having to dig a little deeper to find information about that. And it's still there, but it hasn't really hit the major news cycles in the US anyway, as it deals with the election. Here's the intraday chart where we gapped lower right down to S1. And it looked like, okay, maybe we're just going to sit along S1 for a lot of the day. We went a little bit above. We never did really go below until later in the day when we finally broke below that. And then we saw an increase in selling, took us down below S2. And then we ended up closing right at about S2. So what are some comments that we can make? The stock market will be open on Friday. Friday is Veterans Day. And thank you very much if you are a vet and you listen to this, no matter what theater you served in or what time. That's a real sacrifice for you and your family. And I personally really am grateful for that. So thank you very much. The bond market will be closed on Friday, as will the post office, I guess. But just know that the stock market will be open on Friday for the entire day. But it won't be keying off of the bond market. So we'll have to see if there's something that comes out, if there's something that the markets can latch onto to help give the stock market some direction. Then stocks fell as they were going down with cryptos. Cryptos are running into some trouble now. There's some liquidity concerns and margin calls. Yesterday, I kind of pointed out the margin calls as they apply to stocks. There are some margin calls coming in as they apply to cryptos. And people sometimes, when they're dealt with a margin call with the cryptos, they may have to sell some of their stock to cover the margin call, and that can produce some selling in the stock market. Plus, it's just a negative situation. And for a lot of 2022 anyway, I don't have an actual chart that shows that. I just kind of eyeball it. But if you follow the tech sector and cryptocurrencies, there's a real strong correlation between them. And as tech has been falling through 2022, so have cryptos. And so that also kind of feeds into this idea that maybe cryptos are a little more attached to the stock market. At least for most of the time, I've thought about cryptos as being this separate market, kind of all by itself, doing its own thing. Well, it seems to be becoming more entwined in the overall stock market. Also, the dollar rose and interest rates mostly declined. They were kind of mixed overall. And the equity put call ratio, it's falling after it really spiked up. So that could be positive for the markets. And the STO continues to advance. And I have charts of these that I will show you. The new highs and new lows, I don't have a chart of that, but they're trending lower. Both the 5-period new highs and new lows and the 10-period, they're starting to turn down. And the summation index based on volume is also declining. I don't have a chart of that one. Based on price, it's still going up, but based on volume, it has turned down, and sometimes that can be a leading indicator for us. And the advanced decline line based on one day from Tuesday to Wednesday, it was pretty extreme negative. So we might have overdone it to the downside, at least based on the advanced decline line. And the 10 to the 5, the 10 to the 2, and the 10 to the 3 month, those yield curves remain inverted. But we saw, that's why I have this in blue, the 30 to the 5-year is actually not inverted right now, but a little bit of shift, a little bit of change could take that right back inverted. So that's why I'm keeping it on the list. And sentiment is back to neutral. We're not over on the positive side or on the negative side. We're pretty much in the middle right now. The Dow still has the strongest chart. And even though it was above its 200-day moving average, it closed just below the 200-day moving average, but it's still looking the best of all of the charts, with the NASDAQ 100 still looking the worst. We had the weekly MBA mortgage applications index. They were down 0.1%. Last week, they were down 0.5%, so a little bit of a decrease there. And wholesale inventories, they were up 0.6%, where the last time we got this, they were up 1.4%. That could be indicative of companies making products and not going out the door. They're sitting on the shelves because they don't have anywhere to send them. Pardon me. So we're just kind of watching the overall trend in that situation. Speaking of trend, we're still neutral. We're below 20 and declining with our ADX. And where we had just barely crossed over positive yesterday, well, we've barely crossed over negative after Wednesday's session. Sorry, I'm still dealing with this illness, and at least I'm not seeing double vision anymore. Tried to watch a movie and I got to see it twice. So isn't that cool? Thank goodness it was a good movie. But I have switched our bias over to negative because of the 2% decline that we saw, and I've switched our momentum back over to negative as well. Now, that could all shift. If we get a real friendly CPI report, one that might create one of those new scenarios that the markets have been trying to live off of for 2022, that maybe inflation's coming down and the Fed could start to ease things, that would be really positive for the market. If it comes in at or hotter than expected, we're probably not going to feel a lot of love from the session on Thursday. Here's the equity put call ratio going back 5 days, or just a 5-day simple moving average, where we really spiked up and now we're starting to come back down. We had been working off of this other spike set back in September. Well, now we have a new spike that sometimes, if this really starts to decline, can give support to the S&P 500 to help it go higher. Also, our daily chart shows that we're just a little bit below the daily pivot. So we've drifted a little bit negative. When you above the daily pivot's positive, below is negative, and so the bias is switched more to negative, and we dropped back below the 50-period moving average. So this chart has turned a bit more negative now, and we could continue to fall, but if we get a good report and the market likes that and wants to go higher, we could start to bounce up and possibly get back above the 50-period moving average. And you can see down on the bottom where we have really dropped off in volume. We've been below average all week. Here's another chart. This is the Swinland Trading Oscillator, or STO, that I talked about earlier. where it's continuing to advance. And sometimes, not always, but sometimes this has been a good leading indicator for us. The problem is we don't know when it's going to be legitimate and when it's not. So it makes it more of a gamble. But just know that for right now, it is still looking more positive. And then I wanted to bring up a chart of the moving averages where we dropped below the 20 period moving average. So we're below all of the moving averages that I chart right now. So that is more negative. And we need to get some support coming in to get back above some of these moving averages, or we are going to decline and these moving averages will start to turn down yet again. Then I wanted to update with the longer term fib retracements where we've been at this double fib level right here. We broke a little bit above it. Well, now we've come down just below it here. So that's kind of significant as well. Especially when you have two fib levels that are on top of each other, that can be rather significant and decidedly more negative currently. But we've had that happen before, and we've been able to get that back. So it doesn't mean the end of the world necessarily, but it is a negative sign. And then looking at this, not because there's really any update, we've been below this 38.2% retracement level here. This is a weekly chart of the S&P 500. The important one here is the 200-week moving average. This is very, very long-term. And this 50% retracement level. This, when we fell down a few weeks back, this is where a lot of the buying really kicked in and took us back a little bit higher. Well, if we start coming down, first we'll hit the moving average, which is at about 36.25. And then this other fib level is at about the 35.07 level if we continue to go lower. Now, if we can get some support and get back above this 38.2% retracement level, that will be longer term positive. All right, so what's our outlook then for Thursday? The technicals, yesterday I said they're turning positive. Well, they're turning back negative today. We have the CPI coming out. That's the biggie. We have jobless claims as well as the Treasury budget. Not a big mover. The CPI will be the big one, and potentially the jobless claims. We're looking at more of the average of the jobless claims over a period of time to see if they're trending higher or lower. And then all the geopolitical events that I seem to go through every day. Again, it's probably going to be more focused on inflation and interest rates because the bond market's still open on Thursday and with the CPI coming out. So our scenario's not going with the up or down scenario right now because the ADX is below 20 and we're back to negative with that. So that's kind of, we're more chopping sideways currently, according to the ADX. So our conclusion is the S&P is turning back more negative now, short-term negative, and the McClellan oscillator, which in yesterday's daily brief I said was extreme positive, don't have to worry about that now. It's still positive, and that's why the summation index, which is derived from this, is still positive and advancing. That's based on price, but the volume for the summation index, that's calculated a different way, and that's actually turning down. Then in the intermediate term, we're more mixed. We still have a lot of our intermediate term indicators that are pointing up and some that are pointing down. Long term, we still continue to be negative. So thank you. Have a really, really good Thursday. I hope whoever you're voted for won. I hope what's going on with all the election results is what you want to have happen, and have a really good day. And I'll do my best to prepare another video, probably at least a daily brief for Friday's session.